Regarding our aspiration to reach carbon neutrality by 2050, we believe that our coal business and the energy business must work in tandem to achieve this. So if you look at this graph, we show our high-level medium-term commitments to reduce Scope 1 and Scope 2 carbon emissions from our operations by 43% in 2026. And we believe we can achieve this if you look at what we've already offloaded from our operations, which is the divestment of ECC operations last September. In addition to our solar PV plant in Lephalale that is underway, which is also going to help us a lot, and various pollution prevention initiatives, which we've already budgeted for over the next 5 years. Additional generation capacity we're building at Synergy will be used to decarbonize other third parties in the mining industry and beyond. It is therefore worth mentioning that a project management office to manage the execution of this plan is led by an executive, Mr. Vedi, reporting on a regular basis on key performance indicators agreed upon upfront with our board. The multidisciplinary team contributing to these results also identified more opportunities, as listed on the slide, to further take our carbon from our operations beyond the 2026 timeline. So that work will unfold. We are still consulting our stakeholders further to look at the Scope 3 issue, because we know that from a Scope 3 perspective, almost 98%, Mongeza says it's 99, of our Scope 3, or all of our emissions for that matter, are in the Scope 3 environment, and they belong to Eskom. So that is something that has got to be managed very carefully. We've got to partner with Eskom and obviously look at our other suppliers. And we believe that a plan by the end of the second half of next year could be on the table. But that work, as I said, is foreseen and managed by a few executives. So we are if you look at now how we perceive the role of our energy business, not just in our lives, also in South Africa. We are in an energy crisis in South Africa. And broadly speaking, this is not just us and the rest of the world. We have built a renewable energy business which is well positioned to contribute significantly to addressing an impending electricity deficit. The economic growth of the country and social progress depends on this energy security. And you are aware that we've installed 229 megawatts of wind energy, which is a strong base from which we will build and grow this business. Late last year, we communicated a 3 gigawatts growth target for 2030. However, with the rapid and positive policy developments in this sector today in South Africa, we have repaced our growth to 1.6 gigawatts by 2030 and reprioritize our immediate investment and development in South Africa. We are proud to announce that in our endeavors to grow this business, Synergy has concluded a joint development agreement with Enertrag South Africa to collaborate on the development and execution of renewable energy projects for the Mpumalanga region on an exclusive basis. The formation of this partnership forms part of our execution of the energy strategy. Both Synergy and Enertrag will contribute skills and project pipelines in realizing our joint ambitions, which will accelerate renewable solutions for our mines and beyond. So furthermore, both companies also have strong presence within the region, and therefore this partnership helps to support the company's just energy transition strategy. So overall, it is really imperative to be agile whenever market opportunities arise or market opportunities change, looking at how you really want to optimize the balance sheet to service the needs of the business. So we believe that we are well positioned to respond to our national energy crisis as we pursue our growth and shareholder value creation. There will be opportunities that come that are going to challenge our repacing of our energy strategy. And those opportunities we will look at very carefully. But there will also opportunities that come because of market conditions that call for us to repace. And that's the agility we're talking about. So we believe that this approach is responsible. And its value goes beyond just returns, but also to look at the impact directly to the people of South Africa and our economy. So as the energy transition continues to gather pace, our ability to supply key minerals to support clean energy technologies has become much more urgent. A common theme in copper, bauxite, and manganese, our three chosen minerals, is the expectation of insufficient supply in the long term relative to demand. The Russia-Ukraine war has heightened global geopolitical tensions, resulting in increasing political instability and a higher inflation environment. Higher borrowing costs and political instability brought about by inflation threaten to further widen the supply deficit of these critical minerals by delaying investments necessary for the growth of additional supply. The bottom line is that the world needs significant investments to be made in these minerals to support the much needed energy transition we're talking about. And failure to make investments today in preparation for the expected growth in demand for these minerals will threaten that long-term energy security. Turning your attention to the short term, the current manganese and bauxite pricing environment is supporting of entry through acquisitions. If you read that with what we've said in terms of how we want to look at capital allocation, making sure that we use a robust model to get there, balancing the needs of what we are having to manage in the company to create value for you. And that's what we're really talking about here. We're looking at these in a very responsible manner. Although we've seen copper pricing reaching about $10,000 per ton levels, the price has since moderated, driven by fears of a global recession. So M&A activity in bauxite and manganese have been relatively muted in comparison with copper, albeit at elevated multiples. We've talked about what we see when we spoke to you in March in terms of what we saw in terms of the copper markets. We've made a determination and we continue to look at those M&As. Despite these short-term market dynamics, the long-term fundamentals, however, of these three chosen commodities remain attractive, and we are focused in pursuing acquisition within these minerals. But as we said, always taking cognizance of our investment criteria, balancing it with obviously our capital allocation requirements to balance risk and returns.